I used to force trades like this and it cost me thousands. You see this setup, you think it's clean, and an hour or two later you are trapped. You can't hold the trade, you can't adjust it, you can't even move your stop because there is no clear level. You just sit there in front of your monitor and see the price grind against you, and you feel lost. Look like a perfect trade, but you are stopped out. And that's exactly what S&P 500 did this morning. It teased me, but I stayed flat. I waited for what I always look for the point of no return. And when it came, I hit it. Clean, confident, done. And in this video, I'll show you that live trade from start to finish. By the way, my name is Alex and I've been trading futures for the last 7 years. And I help futures traders stop gambling and master one market, one instrument, S&P 500, one strategy, one goal to become consistent and profitable futures trader. By the way, we don't trade noise, we don't chase any stupid setups. With W free flow, we wait for the structure. We wait for the point of no return. One model, one system, one outcome. And on days like this, that's the reason I'm not losing money like everyone else. And in this video, I'll walk you through why this morning setup was a perfect trap and why I stayed flat. The exact shift W free flow uses to confirm the move. A full breakdown of my live trade, a logic behind the entry and the exit. Let's dive in. The first thing we need to do is to analyze all the 4 main time frames. My W free flow system consists of 3 main parts. We need to understand the first W. We need to understand what is happening throughout the whole auction. We always analyze the weekly time frame, daily time frame, hourly time frame, and the 15-minute time frame. Then we need to answer the second question. The second question is who to follow. And this way we set who to follow, the seller or the buyer. And this way we set our priority, sell or buy. We always have a clear priority. And the last question is where and when exactly to take a trade. And we always start our analysis with the weekly time frame. What is happening here? Here we see a potentially balance forming. Why potentially? We have a potentially we have a fix and an initial trade. You see these question marks here, and this is for a reason. We have the first crucial factor met here. The first crucial factor that allows us to classify any range or any consolidation as a balance is an impulse preceding a fix. In this case, we have a preceding impulse, yes, but we don't have one of the responsive activities formed, none of them. All these two, fix and initial trade, allowed us to identify the top border and the bottom border of a potential balance. And only when we see one of the responsive activities fully formed can we classify all these as a balance. But right now, we just assume that this can become a balance. So the task of the weekly auction is to reposition this key resistance level. And of course, the priority here, we follow the buyer. The priority here is buy, because fix alone can be a factor for sell. Daily time frame. And here on the daily time frame, we already can classify all this happening here as a balance. We had a preceding impulse. Now what we see here, we see a fix, we see an inertial trade, and this is the first segment of the balance. By the way, what is a fix? So you understand. A fix forms when institutional traders close their positions partially or entirely. The second part of the second step of the first segment is an inertial trade. What is an inertial trade? An inertial trade is a trade that is taken in the same direction as the previous impulse, as the previous movement. And this is the first segment of the balance. And the second The second segment of the balance always consists of one or two responsive activities. One is a must. And in this case, we have a seller's responsive activity and the buyer's responsive activity. And what is responsive activity? Simply put, this is a response from an institutional trader from one or the other side, from the seller or the buyer. Following the auction principles, we call it a balance, but at the same time, this is a huge struggle. This is a huge struggle between the seller and the buyer. And we analyze the whole auction, all the steps, everything to understand who is stronger. And by the way, the daily time frame right now and right here, on the daily time frame right now and right here, we have the only factor for sell throughout all the time frames. And this factor is seller's responsive activity. The task here is to reposition this key resistance level. How can this happen? Through the third segment, because the next step of any balance is the third segment. And in this case, it can take a form of a pull through rotation, and then we can see a repositioning. What is repositioning? Repositioning is a clear impulse, in this case above the key resistance level, or it can take another form. It can take a form of middle level reinforcement, and in this case it would look like this, okay? Or it can take another form, another pull through rotation, but above the key resistance level. In this case, the task would be fulfilled. But right now, it's not formed, nothing is formed. We see the buyer's responsive activity fully formed, and that's it. And the next step of the auction is the third segment, and the task here is to reposition this level. Hourly auction. In the current contract, we see a capture volatility. The primary task here was to reposition this level 58.10, and the task failed. As you can see, we have this rotation here, and any rotation is a sign of indecisiveness. The task failed, but at the same time, we don't see any clues, any factors for sell here. And so the priority here is buy. We see the contract institutional play. We see the contract institutional play, which means that if you took a buy somewhere here, you could hold your trade till now. Okay? But in the current activity, we don't see any factors for sell. And the task here is just to continue the movement. Now 15-minute auction. 15-minute auction. Previously, we had a directional volatility, and then we had repositioning and initial fill, retest, and move continuation. Any auction can have a structure, and so sometimes we do not always have a structure. Sometimes we don't see any structure. We see a volatility. It can be a capture volatility, directional volatility, standard volatility, build-up volatility. But whatever type of volatility it is, the task always is the same, is to reposition key support or resistance level. Okay? Once again, what is repositioning? Repositioning is an impulse above or below the key level. And in this case, we had a directional volatility, then repositioning, then the next step of the auction, be it structured or unstructured, the next step of the auction is an initial fill. What is an initial fill? Simply put, institutional traders just initially fill their positions. And the next step is retest. And in this case, we see a retest from this key support level and then move continuation. But take a close look at what is happening here. We had this. We just take this rotation. We had this counter direction, this first counter direction, this second counter direction. Yes, it was not confirmed. It was not confirmed. If it was confirmed, in this case, we would classify all this rotation as a new 15-minute auction balance, and this would be a responsive activity, but it never happened because we see move continuation. But in this case, we don't see any decisiveness here. What is decisiveness? Decisiveness can be always illustrated through a capture, or through an impulse. We don't see any decisiveness here. We see this directional volatility, which means that we must be careful with our trades. Once again, what we just did, we analyzed the whole auction to understand what is happening and who to follow. Just once again, a quick recap. Weekly time frame. Here we had a balance potentially forming, a potential fix and potential inertial trade, and fix can never be a factor for sell. And the task here is to reposition the key resistance level. Daily time frame. Here we have a almost fully formed balance. This consolidation is confirmed, and we can classify this as a balance because we have two crucial factors met here: a preceding impulse and two responsive activities. Now the task here is to build the third segment of the balance and to reposition the key resistance level. And the only factor for sell here throughout the whole auction, throughout all the time frames, is here on the daily time frame, and this is responsive activity. We don't have any selling factors throughout all the other time frames. We don't have selling factors on the weekly time frame, daily time frame, on the weekly time frame, hourly time frame, and 15-minute time frame. Yes, on weekly time frame we have a fix, but fix can never be a factor for sell. Fix alone can never be a factor for sell. On hourly time frame, the task failed. This key level was not repositioned because in any volatility type, the task is the same, is to reposition the key support or resistance level, and in this case, this was a key resistance level. We see just this rotation, and this is explainable. Why? The task of the whole auction of the macro model of the weekly time frame and daily time frame is to reposition the historical high. Okay? And on the 15-minute time frame, the current step of the auction is the move continuation, and we don't have any factors for sell. Yes, we have some weakening factors, We have some factors that weaken our buy priority, and this is one of them is that on the hourly time frame, the task failed. This key resistance level was not repositioned, but at the same time, we don't see any sellers reactivation activity. The same is on the 15-minute time frame. Yes, we don't see any captures, we don't see any impulses here. But at the same time, we can't change our priority. We can't change our priority because we don't have any factors for sell. We gathered all the clues throughout the whole auction to understand what is happening and who to follow. We follow the buyer. Our priority is buy. All right? Now we need to understand when and where to take a trade. And to do that, we need to analyze the previous day. And this is as I call it, under the microscope analysis. This was Monday. We need to analyze the closure, the volatility map, everything, and then align it with the 15-minute with the 15-minute auction taken into account everything I just told you about. All the everything happening on the weekly time frame, daily time frame, and hourly time frame. The big picture. Now, what happened on Monday? Let's read the volatility map. Let's read the volatility map. The closure is up. Yes, the closure is up, and looks like that the buyer has won. But is it true? Can we say that the buyer has won? No. And even experienced traders, even those people who follow my system, W Free Flow, even my students do one and the same mistake. They do not read the volatility map very attentively, very closely. And this is what needs to be done every single day if you want to be successful. Now let's gather clues together. Yes, from the first sight, it looks like the buyer has won because we have like a repositioning here. But no, the closure is up. But at the same time, no, if we would see something like this here, and here, instead of the rotation above the value area, if we would see a rotation like this here, and the volume, the overnight volumes, by the way, overnight volumes appear at the end, by the end of the New York session, somewhere here, and then some rotation and the closure up with the tail up. Then in this case, we could take an early trade on Tuesday. Yes, by the way, we always have a rhythm for the week, for the trading week. I like this analogy. Every week has a rhythm, like any dance or any song, and this is always true for the market, for the market, for the futures trading. And our prediction, my prediction was one of the trading. My prediction for this week was Tuesday and Thursday. We always, in our prediction, we do our best to identify two most tradable days. And you must understand one crucial thing. And if this prediction doesn't work, it doesn't mean you or I are doing something wrong. No, we do not force the market to our mentality. We watch it, we analyze it, we gather all the clues, we set the priority, and if we identify the key levels where to take a trade, aggressive level, conservative level, and if the market doesn't show us the picture we need, we just stay on the fence, adjust to the market, analyze the closure. We wait till the market is closed, till the New York session is closed, analyze it, adapt to it, and make appropriate decisions and conclusions. And that's it. We can't know what's gonna happen. Never. All we can do is to gather all possible clues, line them up together, and then take the best possible trades. Okay? So in this case, we didn't see this. But instead, what we saw is this. You see this rotation above. It shouldn't be here. But it happened. We, as I already said, we can't control the market. And the overnight, another clue. Overnight volumes. Yes, the point of control was shifted here at the bottom of the value area. But why this happened? The answer is simple. Because all the volumes, usually the overnight volumes have a huge build up, or they have huge volumes, and this is why this is just logical. This is just simple logic. Overnight volumes was the point of control was shifted here because the overnight volumes were huge enough. But we can't skip this rotation. We can't skip this false positive closure. No. This is why I make a decision. I make a clear decision to shift my timing to the second half of the day. Okay? Now, we need to know when to take a trade exactly. The second half of the day is 12, 30, 12, 40, or 13, 30, 13, 40. And 13.30 or 13.40 is the last resort for us as intraday traders to take any trades to participate in the market. Okay. Now we need to identify the key levels where we can take a conservative trade and where we can take an aggressive trade. This level, this one would be 60.0. Yes, 60.09. This level would be a level for an aggressive buy. And this level 60.40 will be a level for a conservative price. So if the price goes above this level, then we can take a buy, and this trade would be considered as a more conservative buy because it's above the current local resistance. It's very, very unlikely that it would happen. So now we need to define an ideal scenario for this trading day. Let me show you. Ideally, we need to see something like this during the pre-market session. Then we need to see a consolidation, something like a tight range here, then a bias reactivation, and then at about 12.30 or 13.30 we can participate in the market somewhere here or maybe here after some little rotation. You see, this is an ideal scenario for us to take a trade, okay? Now we need to be ready for a negative scenario. What can happen in a negative scenario? In a negative scenario, we can see something like this. During the pre-market session, we can see a rotation here, maybe some volatility, and then a spike down, and then movement down. And in this case, we would just skip this trade. We would stay on the fence, analyze the closure of the day, analyze the whole volatility map like I just did with Monday. And that's it. These are two scenarios. Now, what we just did, we identified the key levels, a conservative level, an aggressive level where we can take a trade. We identified two potential scenarios. We identified an ideal scenario when we can take a trade, and we identified a potential, the best timing when we can take a trade. Now let's see what happened. Let's see what happened. Now, before I continue, take a look. This was our potential conservative, this was our potential aggressive level to take a trade. And this is the beginning of the New York session, as you can see here. But can we participate here? Can we participate here somewhere here? Maybe because you can say this level was taken, we have a rotation here, and we can maybe join the train somewhere here. No, this is wrong. This is a wrong assumption. Totally, completely wrong assumption. Because first of all, we just reach this rotation. Yes, this is not a huge resistance, local resistance level. This one is more important, but it doesn't mean we can participate here. We need to see bias reactivation. You see, we already analyzed everything, and taking a trade somewhere here would be a huge mistake. Let's see what happened after. Now, I want you to pay close attention to this. Once again, you can say that You can say that this was like a capture of this level. And if you use price action in your analysis, you would see something like a pin bar here, and you would say, yeah, we need to take a buy here. But you see, every single day, the beauty of my system, the beauty of the system my mentor taught me is that every single day we are looking for a point of no return. Simply put, what is a point of no return? This is a place, a level, a zone where the price takes a moment and never comes back to that place again throughout the day. Throughout the day. And I knew exactly. I didn't guess, I didn't expect anything that it's not the best time to take a trade. If, remember my ideal scenario I showed you, if we would see some volatility on this level, something like this, and then we would see this capture, then yes, we can shift our timing to somewhere here, 10:30, 10:40, and then take a trade. But at this moment, I knew this would not create a point of no return. See what happened after? You see this. You see this. Now imagine, first of all, why this happened. I want you to explain why this happened. The first reason is we didn't have a resource to move above this level. At this timing, at 10:30, 10:40, we didn't create a resource to move higher. Next, this level, this level is a current local resistance. Next, during the pre-market session, we saw this negative reaction. We saw this sell, and this is an institutional trader. Let it be an intraday institutional trade. Who would sell here during the pre-market? Who? An institutional trader. This is why this is a dangerous zone. And we didn't create a resource throughout the day by this time to go above this level. This is why I knew exactly that this time in this place would not create a point of no return. Now imagine you took a trade here. Where would you move your stop? Here, where? Because this movement, okay, watching this picture, analyzing this picture is good when, but imagine you are in a real life situation. You won't even have time to blink, you won't even have time to think. It just happens in front of your eye, in front of your eyes, and you think like, what happened? Why my stop loss was taken? Why? That's what usually happens. That's what usually happens. This is why I understood that this was the wrong time to take a trade. Now, what can happen next? What can happen next? This level, this aggressive level we identified was already taken. Now, this, let me just a second. This zone must be held. This zone must be held. And if this zone right now is held, because we don't see any super negative reaction here, we don't see huge volumes here, this means we still can participate in this trading day. What shall we do? Because this timing, 13:30, 13:30, is the last resort for us to participate in any trading day. Okay. By the way, this is an institutional timing where they silently join the market, be it an intraday institutional trader, 15-minute institutional trader, whoever. So this sometimes this might be the best timing to take a trade. If now, right now, if I see something like this zone reinforcement, then I take a trade. Now let's see what happened. Right now we need to be very attentive and very careful. Now, see this. You see this level, you see this volume for hours became a current level for taking a trade. Why? You see this rotation. So this zone was held. We see this rotation as I already told you. This is the timing for an institutional trader to join, and we can join them too. And this is the time when I take a buy. I'm taking a buy right now, and I put my stop just one tick below that level. Now, regarding the target, taking into account that this level is not, we can ignore this level right now. We can ignore this level right now because most likely the price would move a bit higher. Taking into account the experience and taking into account the knowledge I have, the price could go just can move for one more figure. One more figure. Okay, and in this case, I'm just reassure myself and will put my target here. Here. Now let's see how it all worked out. And this is the trade. What I'm showing you here, what I'm showing you here is the nails, and my whole system, W free flow, is the hammer. Now imagine you don't have any experience with using nails, with using a hammer, and someone just gives you a hammer and nails, and you try to use them. What would happen? You may learn at the end of the path. You will learn how to use all them, but how many times would you beat your fingers? How many times? And in this case, yes, in this case, you can go to my educational playlist, because I'm giving everything there absolutely for free. I give you all the lessons here: how to read the market structure, how to read the balances, how the balance can transition to a volatility, how to identify key levels, how to use timing, how to identify the different days or type days, different types of days, how to do all that. You can learn it on your own. You can learn it on your own, but the question here is the time. How long will it take? But you can do it. This is the option. This is the option for you. And the next option I have for you is a starter kit. A starter kit that includes weekly trading plan template and the intraday trading plan template. You just need to fill them out, or using all the knowledge you learn watching my channel. You can just watch all the nails I give here throughout the strategy, throughout everything, like this one, and all the educational videos, and then you can line it all up together. Try to do it on your own. And the starter kit also includes all the links in an organized order to all the resources, to all the videos I have and published, so you can learn it all almost for free. It costs almost nothing. I mean, the starter kit. And the third option, as for me this is the best one, but it's up to you, is to join my 10 weekly program, where I teach you and other futures traders how to understand the market structure, how to read the balances, how to understand what is happening throughout the whole auction, how to understand who to follow, the buyer or the seller, how to understand when and where exactly to take a trade each single day and which days to skip, and to understand when we need to stay on the fence. And that's it. That's the whole system. So it's up to you. You always have an option, but I'm confident to say that my system, W free flow system, is the best possible system for futures trading. You won't find anything like this anywhere. Anywhere. That's it. Take care. Stay profitable. Bye. See you in the next video.